Greetings, market rebels. Welcome to this week's sector situation. I'm Wayne. My partner Ryan is working on our market outlook, which will be coming out later today. It's the week of January 8th, 2023. A little bit, I think, in front of noon here on the East Coast. Let's flash our trustee. There it is, trustee disclaimer. And we'll flash our trustee intellectual property rights notice, and then we'll be on our way. We've just got to make a little bit of a change here so we can get the charts up and running, and that should do it. So let me see if I can get the right things flashing. And we need to go to share 4. There we go, screen 4. All right, so we should be checking out all the sectors at this point. And I'm going to go to the larger view, but I just wanted to point out that everything really was up on Friday. And so if you check out macro measure, it's pretty long, unfortunately, this week, but there was a lot of things I thought that were worth mentioning. I won't belabor those here in sector situation, especially at the very near the start of macro measure. You can take a look at that and you'll catch up on, I think, a lot of things that are due out this week and other factors that are interesting, but I'll flip through them quickly here in sector situation. But I really think Thursday and Friday were great for showing us, or I should say reminding us, how important it is to be open-minded and embrace momentum, because as a short-term trader, I was concerned when things closed on Thursday. I thought it was an ugly close. There were attempts in the market to rally to start the week. They tried again on Wednesday. They couldn't really get anywhere. They were up a little bit, but they couldn't take it to a higher high. Thursday was just not a good day, and things looked rough. And we were heading into expiration. I thought if the expiration, gamma, OPEX, all that kind of stuff favors possibly a hedging going on by dealers below certain levels, this could really start to bring us down to that key sort of 375-ish level. But that didn't happen. We kind of got the reverse, and that now things look much better technically, and they've been sort of stealthily, I think, getting better while we were distracted. A lot of us were distracted during the holiday season and so on and so forth. The operators did a very nice job, very deft touch to really improve the technical situation under the surface. And I talk about that more in macro measure. I'm just going to flash it right here. You should go to macro measure to get a better view of this. But a lot of the market breadth indicators that are not the be all end all for me, but I'd rather have market breadth in my favor than certainly working against me. But a lot of those started to work better and better over the past 3 weeks. We had more of a neutral bias coming in, and I think that was a good call again, probably for the 3rd week in a row, because we just couldn't tell. We had pro and con happening as bull bear. It was pretty balanced, but now I think what went from being mixed and balanced for bull versus bear started to finish with definitely a decided tilt towards the bulls winning out. And that's for now. I don't have any idea what kind of big news could impact over the weekend. By Monday morning, I don't know how Asia and I don't know how Europe are going to fare before we get open, but I'm just saying overall, the way things closed, see a lot of improvement. Now, getting back to our sector view, one part of that is the overall positivity we see here, right? Every sector on our main grid of 12 was up, and some of them very significantly. It seemed like things got a little ahead of themselves. There was definitely some squeezing going on, short squeezing going on, but really the complexion definitely shifted, and a lot of these things are looking better. And I did notice that it would probably still require more effort from bulls, but as opposed to bears probably having a little bit more of a grasp on most sectors and a lot of stocks, it seems like the bulls balanced things out and started to tip them a little bit more their way on that basis as well, where cyclically a lot of things started to shift around to the extent of where I'm poised to be more of a short-term bull than I have been in a while, right? I feel like they need to push a little further, break out. And the thing is, though, this is what I would, again, encourage folks to go check out in the macro measure. but I covered this. We see there's been a lot of activity in spiders and IWM in terms of major index ETFs. There's been a lot of either hedging or what have you, right? Positioning, one or the other, but there's been a lot of volume going up in both of those lately. Take a look at this in macro measure. Here's your 4-year presidential cycle. And that third year, the one we're in, the pre-election year before the new presidential election, is green. And you tell me what happens this year typically, right? Never a lock or guarantee. We're not hostage. We're not held hostage by seasonality. But again, if I could have seasonality in my favor, would I welcome it? Of course, right? And really, the year tends to get off to a very bullish start in year 3. So you can see that here. This is from Yardeni. Take a look at macro measure again if you want to check this out. But the best year, we look at year 1. Here's year 1, first year presidential term. S&P 500 index, 6.7% return on average. Second year, 4.3 on average. Third year, 13.5% on average. Fourth year, 7.4. So this is the best year typically of the presidential cycle. And I'm not forecasting that. I am really a bear. I'm really like an economic bear, but we don't trade that way, right? That's the thing. We're trading in the shorter term. I'm a bear until I see the trend change. That's just the way that the market's taught me to handle things. But you have to acknowledge that there's some things happening here. So look at macro measure, leading economic indicators. I have this up there. When you get this kind of contraction below the 0 line and certainly below this -4% area, we kind of know what happens. Stocks are starting to act as if we're already through the rough times. But again, stocks do get ahead of themselves, and sometimes they're right though. So go over again to macro measure for that. Now the rates are still, it looks like, right, probability wise, expected to head up a little bit, but I guess the bet is now becoming that things level off pretty quickly, right? And that the Fed will be pretty much capping things out after maybe a little bit more of a nudge in about a month or so. And that seems to be where the market's going, more so than not, but it's not completely locked in that way yet. So you never know. Just beware of what's happening here, right? Check this stuff out because there's a lot happening, including Jerome Powell speaking, right? There's also Atlanta Fed President Bostic to start the week on Monday. And we have a lot of things that go towards inflation or the consumer or both. So this could be, now we mix in earnings, this could be a wild week. So there's the warning and kind of that super nudge again and again and again to take a look at macro measure. But you just can't argue with what we see here. Let's get into the charts in a bigger way. I'm not going to spend a great deal of time here in sector situation because it became risk on pretty much everywhere. Now, of course, there's differentiation between some and others. Let's see if I can get the right order here. Where are we on that? Okay, so let me move this out of our way so we can take a look at things. So first off, the tricky one right now, I think, is XLE. So what I'm going to do is take a look at that. You would say, well, uptrend overall, no doubt about it. Nice little pullback, consolidating between the 50 in gold, the 100 in dash white. What's the problem? You're back above the 10, 15, 20, and you're almost took out the 50. That does look pretty good. I mean, I would sort of say, yeah, I think it's looking a little bit more bullish than it has. And overall, this is probably has to be given the benefit of the doubt that this is a consolidation within a larger uptrend, and that where's there a problem, right? You even have positive divergence that formed on Wednesday on the RSI where you had a similar low and you just continue to see better RSI readings. And a lot of people like that. So where's the problem? Well, the problem might be, and I don't know, of course, because this market is not something I have a chance to follow very closely. I've got too many other responsibilities, but here's the oil futures. These are the Feb futures. That's the way that things worked out there, not quite in line with the way that the oil stocks are acting. So we've been noting this for a while, that this is one thing that helped, I think, tip us off to the pullback we did see in XLE. So that there was maybe a pullback due because oil just wasn't working. So still at odds, I think, with each other. So keep an eye on that. I don't think this is out of the woods yet. I do think overall you've got to say that I think the bulls are still in control of XLE or energy, however you want to say it. But I would just, I'm not, it's just been very tough. I feel like that is a really tough one to really get super bullish on at the moment, but that's what consolidations do, right? They kind of get you wondering, wait, is this thing still working? Overall, again, I'd have to say you have to give the bulls the benefit of the doubt overall, but that lower oil futures action has me a little concerned for sure. So that's the first one we'll take a look at. Now, technology, pretty much looking at the similar chart to the QQQs. Tech has been in trouble, but it definitely reversed. You could see it made a new low, recent low there Thursday, which is one of the reasons I was worried the tech was starting to really have trouble again, and that's obviously big, but they completely flipped that around, and they're not too far from the 20. So I would say, look, I switched over to percentages. I would say on this one, take a look at that 20 SMA, and naturally there's a lot of other SMAs just above there that are going to cause this potentially to halt in its tracks and deal with it to fight its way through if there really is a rally. But the first thing that probably says, hey, this thing might start to go a little bit more is your 20-day. You might start to be able to trade it a little bit more there and see if it can hold the 20 and then continue to try. But certainly the way that it reversed on Friday was good, and kind of, again, showing you that even eventually they get around to buying everything, even things that they haven't liked very much. Here's your communications. Now, this was a real dog for most of 2022. Here's the evidence of that, right? But you've got this cluster low, this rounding cluster low, higher low, right? And you had this high up here, barely exceeded this high. So they're giving you a little bit of a hint that there could, not that there is, but there could be a trend change. So naturally, right, if you get this higher cluster low put in, you reclaim the territory above the 100-100, you get above this high, you fight your way through the 200, then you're starting to act much more constructively, right? But it's not there yet, looking better overall, but bottom line is you're already at 61 on the RSI. So not overbought, has some potential, but it's not as though it can go very far probably before it does fall into overbought territory. XLF, this has been one that's, I think this is firmly in the hands of bulls versus a lot of other sectors. You can see that, right? This high, although it didn't hold there, it exceeded this high, it exceeded these highs back here. You've got this higher low, again, a rounding cluster kind of low, and you're working your way back up. Now, the earnings are due out on some of these in the near future, and that could change things dramatically, or it could intensify them. But overall, just calling it objectively, you've got to say that that looks pretty good technically relative to other things we've seen lately. And even the short terms are starting to, the SMAs there are starting to turn up. And really, they flatline the 100 and 150. So really, if they continue to do this, they're going to flatline and ultimately turn the 200. So a bunch of rising SMAs is something that a lot of people welcome, upsloping SMAs. And I if I were a bull, I would as well. That's what you want. XTN, transport's another critical sector. It is a little bit better off, right? If we're objective about this, higher low versus this kind of double bottomish low, and they're working this thing back up potentially, not out of the woods. You can see the 200 really forms the resistance line for you there in purple. You don't really have to draw much more of a line than that. It's pretty darn close to probably where a resistance line would end up anyway. But yeah, that's ultimately where I think the spiders, if this rally continues, they're going to try to, they're so close in the SPY. And if that all the good vibrations keep going this week and next week, I mean, that's the big challenge. If it can get through there, hold there. And of course, what that would look like would be something like this in whatever ETF or stock we're looking at. It would look something like this, maybe, where you get towards 200, you fail initially, they put in a low not too far from that, they pop it back up a little bit, then they drop it down. This is what the idealized scenario. And then you come back to the 200, test it there, go again, hesitate briefly there, and then you get your push that takes you up and through, which I ran out of right right side space there, right? I don't have much more to work with, but you get the idea. That would be something like we'd expect of virtually anything in an idealized fashion. It's great when things work that way. They don't always work that way, but you get the idea of what would happen. And certainly turning around energy, if that takes off, and that's bad for inflation, but it's good for economic activity. Seeing people come in to buy XLC and XLK, the tech areas, the communication areas that are largely tech weighted, that would be good, right? Financials doing well would be good. Transport's doing well would be good. These are all good things. I don't think that makes a lot of sense to me, right? But I don't have the time to beat Wall Street in terms of fundamental research and developments in my spare time. I'm so busy all day that I do the best I can to keep up with it. And Ryan keeps up with that very well for everyone with all the discussions we have in our webinars pretty much each and every day. XLV was a leader. We noted that it kind of got a little haywire to the upside. It was starting to flash some negative divergence, and it did finally come off a while ago, and it's been holding out. But this to me looked concerning. I was like, wow, I was looking at the sector thinking this thing could fall apart and definitely test the 200 on Thursday. Well, the gang had other ideas. I mean, they were so close to possibly breaching these lows. And just like with the market, they reversed it, brought it back above the 50. They're in gold. All you need to do really here is in a rising market, take out that 20 SMA. And there's not a lot up here to keep it from trying to pop a little bit more. Not a big move dollar-wise, but just visually, you can see that the potential's there. But that to me is more mixed at the moment. I think, that is not firmly in the hands of bulls or bears. I think the bears have grabbed it. You've got to wait for that to play out more, but it certainly doesn't look as strong as an XLF, for example. XLP, another sector that when the gang's money managers were playing defense, this thing was getting bid and XLY was not, which we'll talk about. But you can see this had a great day. Walmart had a really good day. Greg put a nice Rebel pit trade in for Walmart. He didn't put in my MA and my Visa. I'm still going to have a talk with him about that, but that's okay. He got a lot of other good things like Tesla burst trade there on Friday, which made a nice move. But here's the staples. I mean, they did very well on Friday, held support at the 200, right? Did you have any technical signs of that was maybe happening that could help you kind of looking back on it, right? To kind of review. You had better action on some of the stuff we're looking at, but overall, you had a little bit worse RSI reading here. You did have some decent volume going up on these sell days. So that was a nice little deft move in the sense that I don't think that a lot of the conventional ways that we interpret things, a lot of that did not seem to really look very, very good at the time there on Thursday in XLP. But by the time they got through with it Friday, it sure did. That's how quickly things can change for short-term traders. So once again, I'm just reiterating, this is why, you've got to look at your intraday charts and you've got to look at things and be ready to shift. And I think shifting and adapting is such a critical thing. It's kind of tough to do because initially you take a position one way or the other, but really when you do not get such deeply held convictions about the very short term, I think that behooves you to do that, benefits you to do that. So here we are looking at I did look at XLV, my bad. I wanted to look at XLY. I typed in XLV, but I wanted to look at XLY next. XLY has been in trouble. I mean, it makes sense, right, that this discretionary spending isn't going to be what it typically is if you're going into some lean economic times, which it seems as though we're in and that we maybe we'll have more of. But again, the argument from bulls would be, well, it was pre-discounted. Look how far down discretionary names fell, and now they're too cheap and they're a great buy. Maybe they are. I don't want to even get into that, but that's the counter argument. I still think there's more fallout on the way that isn't going to be very good. But hey, we'll see, right? I think you're going to see that market might move up in the face of that. There's the wall of worry a lot of them love, but again, the years, you just never know, or you don't know what can develop. Certainly better RSI readings as this thing kind of flatline. And then eventually, right, the sellers became, I guess you would say, somewhat exhausted. It just kind of ended. A lot of this large volume on the way down tended to dry up. Bulls started nibbling. Now they're trying to turn things. They're right at the 20 here in XLY. Get above there. I got to think, yeah, there's flat lines that Ryan could share with us. But yeah, I think you probably try to move up towards the 50. If the market has a nice week or two here, that would be what we would expect. I think that we get moved up towards that 50 level, and not even close to overbought, by the way, on the daily. So you're just under 50 in RSI. I think in this one, the bears are still in control at the moment, but I think this took a big shift. I think with any more pop here, then you've got to start saying that you get closer, instead of being 65-35 in bear control, I think it starts getting closer to 50-50 with a nice week maybe. So keep that in mind for that. Could be a good area to look inside of, drill down, whatever you want to call it. But just check out some of those components, and maybe some of them are primed to go. And if you have a strong week, they could do a little bit of catch up because that area has been hammered so much. XLRE, real estate, again, another one that's still a little baffling to me, but I don't bring my macro and my economic takes on things to bear in the short run trading. It just doesn't matter. They can do whatever they want. So why encumber yourself with all that stuff? But this definitely took a turn to this point with that save on Friday. This is definitely looking better, and I think the bulls are not in control here, but I do think that there's a little bit less bear grasp on this at this point. And you have to I think you have to say that, even though this looked like this bear flag that you could break down from, the way they reverse this thing is pretty strong as of now. Now, clearly, everything can change in anything with all the news that could be made this week. So we can't get too far over our skis, but at this snapshot in time, things I think are looking better. And you could see this low, this cluster low. You've got a higher low put in here. You kept making this high, got taken out here way back when, and they've put a few higher highs together. So this has got a little bit of cup and handle-ish, not necessarily a cup and handle, but has resemblance to one potentially, at least in some eyes, I think. Clearly gets through the 100 there in a strong market. That's going to probably be a release point for this thing to try to work higher. So I think the 100 is big for you this week. Not early in the game in terms of, hey, I'm picking this thing up at overbought outside of the Bollinger Bands. There's a 32 reading even on that day, the RSI. Well, we go back one day and you're at 26. So 26 on RSI, way below your lower Bollinger. This is that kind of reversion I talk about, where if you set your Bollingers up and they're kind of wide the way that they were there versus narrow the way they are here, you then start to see the turn. These are counter trend trades, which concerns me, especially if folks are new. You got to keep those on a shorter leash, in my opinion. But they do offer opportunity to get back into the bands. Usually, right, most of the trading takes place, the overwhelming majority of the trading takes place within your Bollinger Bands, and that's where they offer value. In theory, is that you're outside of them, and that should be news, right, for people to be able to work with potentially. But again, little different style there that I like. I'd rather trade with the trend, and I'd rather buy after after we've seen a little corrective action and it looks primed to go again. Interestingly enough, more like this, not exactly like this, but more like this. This is an ideal, but it's not bad. It's solid. And this is XLB, your basic materials, and they're back above all the SMAs. They're just back above there, 55 on the RSI, not overbought. I think this is another sector that's more so in bull control, and a little bit more action will definitely tweak it to where there's even more bull control. So again, I think the bulls are overall in control there. And remember, it's still overall in a longer term downtrend, but it did make higher highs than this corrective action here. And right now, there's where this big higher lows coming in. I think way back when we did talk about possible kind of double bottoming and things like that with improved RSI. A lot of things are in here that can help you if you're trying to learn this stuff, and you go back and review a chart like this, and it can help you. But you've got to like that we just don't know how expiration influence that was. But that's a really strong burst out of that consolidation that most stocks were in. The SPY certainly were back above all SMAs. And again, I think if the market can continue to remain in rally mode, you would expect this to try to work its way back up and try to challenge those highs. The possibility, of course, of a lower high getting put in is always there, but that's just part of trading every time. XLI, I'm not even going to spend any time on it. Very similar, right? A little bit higher on your RSI reading, but I think this is one that the bulls are probably in a little bit more control, in my opinion, a little more control here than the bears relative to XLB. So I think this looks a little bit better than XLB, and I think the bulls have a good grasp on this. The market needs to go now, and that will allow something like this to not have all that much of a pullback. Note right how this thing popped from here to here, gave back a respectable, probably more of a 38%, 38.2% retracement there, I would guess, something in that neighborhood. And it's a shallow one is the point. And usually shallow is bullish, right? That you have a more shallow pullback gives you a chance to really keep the strength going. So we'll see, but that is certainly something I wouldn't want to fight against yet as a bear. I think you'd have to wait for the 50 there in gold at the very least before you really start getting bared up in the short term. We could definitely let more price action develop and become bears from a higher level on a reversal trade, but we need to see that price action trace out and then see how the complexion looks at that point in time. And another one, which is XLU, another one here that was kind of a big winner in leading up to the end of the year, has really gone dormant here along with the market. I think we check this out from week to week, but for a change, there's something worth noting. I think it's very clear. I think you may as well wait for this thing to get out, close above the 200 there in purple at the very least. If you want a little more proof that it's ready to go higher, we'll get above that opening right there on that day, 1228. And if you really want to give it a little bit more that you need to see, let it try to take out the 1228 high on a closing basis. If you want to see this thing fail, you want to bet against these things for whatever reason, you definitely have to wait, I think, for the 50, because the flat line down here that's just above the 50, that's held so many times. You probably want to see the 50 get clipped quickly if you want to go short this thing. And it's got some gaps to the left, so could be something there. I mean, we're not big utilities traders. I'm not trying to make a joke out of that. That's not where we see a lot of the action in UOA, and certainly there's better, we think there's better opportunities in trading tech to get outperformance in TNT, Rebel Pit, things like that. Now let's look at a very important sector, which is SMH. And this, again, kind of has a cup and handly thing sort of happening here. And that's a pattern that I think is pretty respectable. I think it's a very good pattern, in my opinion, to keep an eye on. I think it can produce some really nice moves, and I don't think it's a failure all that often compared to other patterns that people like. So I think that's a pretty good one to keep an eye on. You can see we have a resistance line we've got through here, and it's really right there, and it's above virtually all the SMAs except for the 200 in purple. That would be the next test, and getting above there then leads to testing some of these levels up here. But that's looking better, and it does have a decent pattern. It's again cup and handle-esque. So it did a lot of big work there on Friday. So keep an eye on that one if it keeps going. It's an important sector, looking better now. Clearly, what we would do, I think, on this one is to say, well, they didn't like what Powell had to say. They didn't like what Bostic had to say. They didn't like what the CPI was. They didn't like what University of Michigan had to say, whatever the case may be. But we would need to see that support line get cracked, I think, at this moment in time, and before I would start to go short that, because that, right now, I think that's clearly being supported along that tangent, if you will. And so let's give it its due. Really, you probably even want to wait for a little bit lower than that. There's probably a flat line near 202 People would say, well, that's way away, but yeah, it might be. But and at this point, we would need to see more upside action and looking to fail from up here to really raise the trigger in my book. I don't want to fight against something that's holding and really looking to move up. And you can see that this is fresh, right? The Bears had control of that as of Thursday, and it held support, and then they took it up. So it's a fresh kind of like bull seizure, if you will. And I don't like to get in the way of fresh bull seizures if I don't have to, because they'll make you pay more often than not. Housing, XHB, another kind of head scratcher. Like what in the dickens is going on here? But the technicals are the technicals. It's back above all SMAs. I don't really trust this thing. I think, if we look at, say, lumber, LB, there you go. We'll take a look at this here. I mean, lumber is not looking good. I don't think lumber looks all that good right there when everything kind of rallies and then you finish that way. We could try to look at maybe the March future to get a little bit of a different story, a little bit of a reversal on that one, but it made a new low. I mean, we've been saying this, like this is kind of like until it changes trend or threatens to, we'd have to look at the 20-day at the very least there in blue to start getting a little bit more excited or constructive on that. But bottom line is XHB. I mean, it's kind of much like the oil stocks. They're saying, hey, I'm ready to try to go up. Meanwhile, the futures that are related to them at the very least are not looking nearly as sanguine. So it is what it is, but got to call it like you see it. There's nothing wrong with trading this just because it is what it is. But again, I think there's limited opportunity there at the moment. I think other sectors are going to offer more, but again, you never know. We have our friend Jerome speaking this week who could change things. A lot of things could change things. So got to always be on guard in the markets. XAU, if you're short-term trading, XAU extended outside of Bollinger Bands. Bollingers aren't particularly wide here, so I'm not super worried about that, but I do take note of that. And I also know that this is a very squirrely, very sort of tough sector, right? We know that there's a history here of major Wall Street operators manipulating gold and silver prices like it's just business. Like this is what we do. And I guess other than the clear ethical violation, right, of doing that, who can really blame them when the government only periodically, like once every 5 or 10 years, gives them a slap on the wrist? And like I've always said, to kind of paraphrase Wimpy from the Popeye comics, would you mind if I stole hundreds of billions now and paid a $5 billion fine several years from now? That's basically what it comes down to. Maybe not even that much. So the manipulation is remarkable, and it's permitted, might even be encouraged. I don't know. I'm not an insider, but we've been saying this for a while. This is looking better and better, but you just got to wonder, knowing how metals trade, I would keep going with it, but it's at 68 almost on the RSI right now. It's outside of Bollinger's. I would be careful, right? If you get more pop and you're in some of our metals names that have been working, great, but roll up, keep rolling, and be ready, right? Prepare yourself for wherever support is, because you just don't want to give a lot back quickly. And that can happen in stuff like this. It can happen, like you get a break of support, you can just see what happens right there. So overall, I think the bulls are in control. They might be a little over their skis. And I think that this is going to take more time. If this keeps going, I would kind of be surprised. This just keeps going and going and going, and without really pausing at this point, just to kind of, encapsulate my thoughts on that. So that's the look really of everything that we chart, except for we haven't looked at copper. So let's take a look at copper. And this is interesting, actually, because this is looking a little bit better. And we've been noting that it keeps getting a little bit better, and it's not really knocking your socks off. But in the face of everything, where, maybe I'm behind the times, but you got to say that this is definitely starting to look better technically. It's close to, not there yet, but it's close to breaking out. We need to get above 396 up here to put in a new recent high. It's above all the SMAs, and the way that things like China have ran, and this has been really strong, right? To go from 21 to 32 nearly, it's a 50% move in just a little over 2 months' time. Things like Germany, right? These are the largest, some of your largest economies. Look at that. I mean, Germany is up strongly, and I think EWJ is it for Japan? And even Japan, right, well off the lows, so on and so forth. So we could look at maybe another one. This won't become a common thing that we do here, but Italy's not really what I'm thinking here. I'm trying to think of, I know there's one more that Brazil, I don't even know what to say there. That's a political situation there. What am I thinking of? I better let it go before I was thinking of India, I think, but I'm trying to, why am I having the blank on that, on the symbol on that? Might have to, yeah, then I'm not seeing that. There's one that I've looked at several times before because I wanted to get involved there, but I don't recall what the symbol is. But so I'm not going to speak too much to that. I don't want to force anything without even looking at the ETF I've got in mind. But overall, I think you can see that things are looking better. This is kind of the funny one we usually end on, which I'll bring up here before we wrap up. But this XBI, this biotech ETF, and you might like another one instead. I don't want to act as though this is the one anybody should be trading. And I used to follow this stuff a lot more closely. Again, it's another one I just don't have the time on. I didn't mean to go to weekly. Come on, give me the yearly. But we've been talking about this but it might be worth, it really might be worth, right? If they're moving this market, if they end up moving this market back up, it might be worth putting a little bit of an alert here at say 85, right around 85, and just start watching it, because this is a really extended, narrow consolidation. So they've really kind of brought volatility in to a degree, right? That would be statistical volatility. Historical volatility is really in. And that's that sort of storage of energy argument, and that you're going to get this release of energy, and so people call that a squeeze. There's a lot of different terms for it by different technical people, and I apologize for the mess on here, but you just get the general idea that you break out of a consolidation in a strong market, and you've been consolidating for, I don't know, I guess it's 4 or 5 months of sideways action, or maybe even a little bit longer, then you might finally get a nice push, right? Especially if they're trying to sell that we're in this new bull market, so on and so forth. So I would just kind of keep that in mind. And volatility's cheap probably in there would be my guess relative to how it's been at times past. So you might be able to get to play something cheaply in there. Some of these allow you to, and this should be one that does, I think, you ought to be able to go into analyze and take a look at what's in there, and then see if there's any names that really leap out if you'd rather grab a small basket rather than try to trade the ETF. And I like that idea. I do that myself at times because I'm trying to really get the picks of the litter, technically speaking, not from a fundamental standpoint, because my fundamental take is not, there's no time for me to have a fundamental take. It's just not possible, frankly. So I have to have someone develop the fundamental take for me and then let me inform me. That would be the only way I could have one. Someone I relied on clearly too, right? But yeah, I mean, working above all the SMAs because they're all pretty much flatlining. So you could get that, again, that big move out of consolidation. Not predicting it, just telling everyone to keep their eye on it. And I'll finally wrap up just by saying that I think that things definitely closed very craftily. Did they kind of flip things around towards the very end of the week in this big way? Now, don't want to read too much into one day. could be expiration related, all those other caveats. But again, if you just look at big picture, you kind of have this inverted compound head and shoulders we've been talking about, but that kind of is morphing into kind of a cup and handily potential situation a little bit. Not, it's not textbook. I would certainly not argue that this is textbook, but it has that look, and that is potentially very powerful. And like I said, with the way that things tend to play out, and I just, as much as I don't think this makes any sense to me currently, I have to just note that seasonality is what it is. And the other thing I would throw at you to kind of conclude is that after you've had a pretty big down year in markets, usually after you have a big down movement, you get a big up movement, and you get these strong bounces. So from one year to the next, and Market Rebellion tweeted this out a week or two ago, maybe 3 weeks. I can't remember exactly, but we had something where we put out, noted that there's not a lot of back-to-back really ugly years in modern stock market history. Certainly, right, the Great Depression, certainly after the tech bubble, we had several strung together. And I do think at some point, just like they draw consumption forward in the way the economists talk about it, I do think a lot of return at times gets drawn forward, and these guys just build a bullish case and mark stocks up to such a degree, to such a level, that there's just not that much more bullishness in the tank unless you're just relying on the greater fool theory. So fundamentally, it just gets priced to perfection, and maybe even then some. And that's, I think, ultimately not where you want to buy. And that's where we can try to do well with some trades that are based on reversals and corrections, but that are bigger picture. But I hate to fight against seasonality. I don't think it's be all end all. But remember, bad year, and then this seasonality really, you usually get bounce backs, and seasonality is the strongest of the 3 years. So I'm not trying to sound like a Super Bowl, Perma Bowl, one of the Fin TV players. I certainly don't view things that way presently. But I think the thing I can help newer folks out with the most is to tell them that in terms of short-term trading, you need to be open-minded and flexible and willing to just embrace the volatility. Your job is to make money off of volatility and movement, not to be right about your end of the year prognostication. That's, it's fun to do that maybe, but it's not going to matter in the short run. A lot of times they'll shake off many things for quite an extended period of time, only to kind of face the reality later. We use the old walking or whistling past the graveyard saying, to describe that. And I see that way more often than not. I've seen the ignoring of great risks and trying to play down things, essentially denial. I've seen that a lot more than I've seen extended panic, usually, or extended dismal outlooks, right? Those extended dismal outlooks are few and far between, but the euphoria tends to, in my opinion, last longer and longer. And it seems like in the modern market, to me at least, I know that might not have always been the case, but it seems like it's that way, that the old buy the dip mentality that got built in ever since Greenspan and the tech madness of the mid to late 90s and that whole online trading thing, it just seems like that buy the dip mentality has never been fully beaten senseless, and people are it never got knocked out enough to where it didn't come back again, is what I'm trying to say. So just keep all that in mind, because a lot can happen. You may still be ultimately right if you're a bear, and you might have to deal with a lot of upside movement. But as they say, right, the first time you notice you should hedge is often the best time. And remember, anytime you hedge, you can unhedge anytime as well. And incidentally, it just reminded me that Ryan is going to be doing something pretty solid, I think, pretty good. I don't know all the details yet, but I'm sure he's doing a good job working on it. But he's going to have a special program that's available through Market Rebellion that's about hedging, portfolio hedging, hedging individual stocks, all the different things you can do, things to look at. And I think it's great that the company's bringing out this course, because it's always been a very important thing for me, because I hate to see people take losses they don't have to take and sort of struggle and suffer unnecessarily. And simple things like a collar that Ryan, I'm sure, will be covering can really be incredible game changers for people. There's a lot of other things naturally too, but I hate to see people that work so hard, put their money away, invest, and then they get closer and closer to the retirement years, and then they take a nice 60% drawdown thanks to Wall Street wizardry. You know, that's just, and the Fed, of course, too. But I hate to see that. And that's why you always hear me talk about being able to play defense, knowing what to do, know your option strategies, know what's available to you. You don't have to kill it as a bear. But if you could stave off those massive drawdowns that almost everybody else suffers because you hedge smartly, you can far outperform folks. In fact, I saw a study that noted that if you miss the 10 worst days in the market over the course of time that you're in, that's better in terms of helping your performance than it is to be in for the 10 best days. In other words, if you had to pick one or the other, you would pick be out of the market on the 10 worst days rather than be in the market on the 10 best days. And it makes sense because of how things, of course, fall apart when the bear gets towards the very final stages in terms of price action. So don't want to go too far afield. Just wanted to share a few things. It's early in the year. There's a lot of potential for volatility. That's how I look at it for this year. I think it's going to be a lot like last year, but different. You're not going to get the same price action, but I think you'll get a lot of opportunities to trade on both sides. And we'll take what comes our way and do the best we can with it. That's the bottom line. So I hope something I covered and shared with you during this video helps you out this week or in the future. I want to thank everybody for tuning in, and I wish you all the best week going forward. Take care, and thank you.